Live. We're trying this again. Amber Jamanka, your favorite realtor. I'm here in Cambridge. I'm at my favorite Cafe Zing. You might hear some noises in the background. And I am here with my favorite mortgage lender, Erin Sadlier of Movement Mortgage. And today we are going to talk about this amazing program that only her lender offers. And but first, let me just tell you that Erin and I have known each other for a while. We've worked together on several different deals, and she's amazing to work with. Just like not all realtors are created equal, not all lenders are created equal. You want somebody that's responsive, that you can call on the weekend, and she's always available, always very responsive. And her mortgage brokerage has amazing things that they offer that other brokerages or other lenders don't offer. So that is amazing, and I wanted to make sure that you guys hear about that. So without any further ado, do you want to introduce yourself a little bit?
Hey everybody, my name is Erin Sadlier and I'm with Movement Mortgage. Today we're going to talk about the Movement Boost program. So this program is specific to Movement and it is through FHA loans.
Hey, we got Isis. Hey Isis!
So the Movement Boost program is designed for FHA loans and it covers the gap for your down payment. So typically you put down 3.5% with an FHA loan. Movement is going to offer a second lien to cover that 3.5% and in some cases even 5%, which will help with another 1.5% towards your closing costs and cash flows.
Oh yeah, that's right. We were gonna 1.5 towards closing. We're gonna show you guys some slides to break down these numbers so it's not so abstract, which I'm really excited about. Isis, can you give us a sound check? Can you tell? Because last time we tried to do this, we had sound difficulty. Can you hear me? Okay. Can you hear Erin? Okay. Hopefully she's still there. Coffee time. So we're here in the cafe. I've got my iced espresso actually here. That's what I was gonna do. Cheers. We've got no response from Isis, so
Well,
let's assume we're good to go.
okay.
Okay. So the first thing that I was gonna do, I made a post on Facebook the other day. Oh hey, Lucia. Erin is quiet like a mouse.
Oh no.
Here, talk into it.
All right. Can you hear me?
Yeah, maybe on that. I think it's supposed to be on that side.
Maybe
Testing
that's
that.
better?
Yeah. Okay. Well, okay. Isis, let us know if you can hear Erin better now. Okay, so what were we gonna say? We are here. We're in the cafe. We're going live. We're just trying to have a casual conversation, but to also give you guys some great information. So one of the things that I loved about working with Erin and Movement Mortgage is, and this is separate than what we're talking about today, the Boost program. One of the things that she can do, her brokerage, they can do much shorter, quicker closings than any other lender that I have worked with. And the quicker you can close, the more competitive your offer is. And when you can close in a couple of weeks, that's comparable with even having a cash offer. So that's something that they can do. Do you want to just mention a little bit about how that works? Like how you close so quickly?
Well, so we can close quickly, assuming if the borrower moves with us, and we move at the same pace. but we are designed to have quick underwrites, and we have an amazing staff and support staff that really move your files along, so that once your loan even goes into underwriting, it does come out within 24 hours, but it actually comes out within 7. So it's pretty fast, and everyone moves quickly. So we want to meet our target dates of within 2 weeks.
Yeah.
It's not on every deal for certain, but it is a great way to get your offer accepted.
Yeah. I mean, the fact that they can do that at all blew my mind, and I only found out about this a few months ago. And before that, I would have told you the fastest you could close is probably 30 days. Like when lenders started offering 30-day closes, that was exciting because before that it was 6 to 8 weeks. So now when you told me 2 weeks, it blew my mind. So anyway, that is a separate thing that Movement Mortgage offers. But today we're talking about something different. We're talking about the FHA loan and the program that Movement Mortgage has that nobody else has, which is called Boost. And that is kind of an adjunct. Is that what you would call it? Like a supplement or separate to the FHA loan?
Yes.
Yeah. So can you maybe say a few things about what the FHA loan is to start with that they might not know?
Sure. So FHA loans are a federal housing loan. It's an awesome loan program. It does allow. It's a little more liberal when we look at people's credit and we look at the ratio of what they earn to owe and any type of maybe credit that they had in the past. So it is more liberal. It's an amazing product, and it's a cool way to get into a house with what is typically 3.5% down. The cool thing about this program is we can help folks out with that, because a lot of times people have, the income, but their assets may not just be there yet. So this is a cool way to get into your house now, and you can restructure it or pay things down anytime.
Okay, so I'm going to just jump in and break that down a little bit more. So one of the things I want to say is one of the biggest mistakes that home buyers, especially first-time home buyers, might make is to think that they have to save to put 20% down. And that might be true for some commercial loans or investment loans. But when you're planning on living in the house, there are a lot of different types of loans. And it is almost, I would say, rare that a first-time home buyer puts down 20% in this market. And so a lot of loans will allow you to put down much less than that, maybe 5%. But this loan that Erin is talking about will allow you to put down only 3.5%. So that means that that's so much less that you would have to save. Now, what we're talking about now is something that's in addition. Oh wait, and let me just back up. It would normally be 3.5% down, and the in your credit score that you would need to qualify for this loan is also a little bit lower than the standard conventional loan. So there are a lot of things that the FHA loan is already a big advantage. Now, on top of that, we have something else. So now instead of the 3.5%, when we're with Boost.
Yep.
Yeah.
So with Boost, we offer a second lien to cover that 3.5%. So it is a loan. We do make a payment on it each month. Excuse me, and you'll see the payment when we go through the actual example. Mm-hmm. The loan can cover the 3.5%, and then in some cases we can cover 5 to give you an extra 1.5% towards your closing costs. Okay, because in addition to your down payment, if you were doing a different loan type than this, that you would have closing costs and escrows for tax insurance on top of it. So it's a really cool way to have very minimal out of pocket in order to purchase.
Yeah, exactly. Like zero out of pocket.
Well, you're going to have to pay something because your closing costs aren't going to be just the 1.5.
Okay.
So it won't be completely nothing, but it will be
probably a few thousand.
5%.
So closing costs for an FHA are what are usually, do you know, like around 10, 12,000? Are they usually higher than a conventional loan?
They're not really higher. The underwriting and so forth are the same. What impacts the cost of closing costs really is how much house you get and the larger loan amount and purchase price, because the insurances and the closing costs are really the most expensive parts of it, and those are based off of purchase price and loan amount.
Yeah.
I would kind of say you're looking around 2.5% of the purchase price for just closing costs and escrows. If the taxes are very high, that number's going to be higher.
All right.
Excuse me.
So I know we're talking about a lot of stuff that might feel very abstract. So now what we're going to do, which I'm really excited about, is we're going to do a real life example. I'm going to pull up a house from the MLS. We're going to do a search. We're going to find a house. Well, secretly, we already found the house we want to show. And then we're going to break down the numbers using this loan and show you guys. Because I went on Facebook the other day and I put a post and I said, if you could buy a house for under 500,000 and have your monthly payments be under 4,000, while I put 3,500 a month, would you do it? And a lot of people responded yes, and a lot of people responded like, yeah, but that doesn't exist. There's no such thing as 0% down, or there's no such thing as owning a home and paying under 4,000. So we're going to show you that that's wrong. Let me go ahead and share my screen. And I'm not sure what's going to happen to the video when we do this. I think we might disappear, but we're going to share the screen and see what happens. So I want this one. All right. I think they're going to make me log in again. Oh, okay. I'm still logged in. So here we are on the MLS. I hope you guys can still hear me. And I'm going to do a search. And I'm going to do here single family, and I'm going to do condos. These are all the new ones. I'm going to do between 400,000 and 500,000. And I'm going to do my zip code, which is North Cambridge, and I'm going to do let's do a 15-mile radius. So look at this. We have 127 homes and condos that came up. So let's take a look. We have Saugus, we have Weymouth, we have Lynn. Now, obviously, we're not going to have Cambridge. But what I'm trying to show is that you might not have to go as far as you think. Stoneham, Peabody, Lynn, Braintree, Roxbury, Woburn. So we have here 127 options. We're not going to go through all these. And then also one thing is when you're looking at single families versus condos, when you're looking at the condos, you want to lower your max price a little bit because you are going to have to take into account the monthly condo fee. So for this example, we're going to choose a single family. Let's see. I know it's in here somewhere. I know what to do. Okay, so this is the one I wanted to choose. It's in Roxbury. It is a single family for 474,900. Let's take a look at the picture so you guys know what I'm looking at. Now, I chose Roxbury, but as you can see, if you didn't want to go into the city and you wanted to go like further north or south, we had Quincy, we had, Lynn and Peabody and Braintree, all sorts of different places. But this is an attached single family. You're right in the city. You get some pretty nice bedroom. Kitchen here with the granite. The pictures are, a little cluttered, not the best, but the bedrooms are large. Things look pretty new. Nice sound system. Look, the plans. Okay, so this is, wait. We got to show the in-unit laundry. Super important, washer, dryer. So semi-finished basement. Okay, so here we have single family, 3 bedrooms, 1.5 bathrooms. What else do we want to say about this? Built in 1989, which is friggin' amazing because most of my houses I look at were built in the 1800s. It's been on the market for 13 days. Oh, they did a price change. So, been on the market for about a month. All right. So, here is the number we're looking at, 474,900. And then, like I said, we don't have a condo fee. Oh, but we also do have taxes. So, okay, so here we're looking at the 4,316 is the actual tax amount. We don't know if that's with any, what do you call it? Like residential exemption. It doesn't say here. So we'll just say that that's the taxes. That's all we know. Okay, I'm gonna stop sharing for a second. Okay, so we're back. That was the house. Now we're gonna share the screen again and break down the actual payments, monthly payments. Okay, share the screen again. This time we're gonna look at this and share. All right. Okay, wait, what do? We can open? No, we want to slideshow. Here we go.
Right.
Okay, Erin.
Thanks, Amber. So basically, you can see here that we have our two loans, and these are based off a current market rate. If you have any rate questions, you can put a comment in the chat, and we can have a side talk. We're going to see our first loan here, so that's going to be comprised of our 96.5% loan plus the upfront mortgage insurance premium associated with FHA. So you can see how our principal interest is just over $3,100. The private mortgage insurance or PMI is $330. Switching slide.
Oh, were we going to do the other one first?
Yeah.
Okay, sorry.
So we see our mortgage insurance for $330, and we have our second loan for the 3.5% down payment with a payment of $210. So here, when we factor in our principal and interest and insurance alone, we're just over $3,600.
Yeah. So just to recap, the PMI insurance is an insurance that is usually mandatory when you take out less than 20%. So that is the advantage of putting the 20% down, is you do not have to pay the PMI insurance. Yeah.
So FHA loans, mortgage insurance is not the same as other loan programs. So for this mortgage insurance, if you put down 20%, you would still have it with FHA. So it isn't going to be like another loan program, though Amber is correct that with other loan programs, if you put down 20%, you're not subject to it.
Mm-hmm. Yeah, so the whole point of the FHA is that you're not doing that.
It's really good loan because it's a little more liberal on their guidelines. So it helps folks that maybe don't have 20%.
Right,
maybe
exactly.
Their credit score is not 800 and things like that. This is an awesome program to help those out.
Yeah, exactly. So we've got the primary loan, and then we have a secondary loan. So normally with the FHA, you put down 3.5, and now with this boost program through Movement Mortgage, you get a second loan that's not only for the 3.5, but that could actually be for up to 5%, meaning you would have extra cash on hand for the closing costs. We should put that in here, so in the slide somewhere. But yeah, so here we're gonna have the total monthly will be a little over $4,000 when you start to take into account all of the insurance and taxes, which we did not show in the first. So in this first one, we're only showing mostly just the mortgage and the PMI insurance itself.
Because in this example, these numbers are accurate off of this house. Off of a purchase price of $474,900.
Yeah.
Versus when we add the other numbers, those are estimates. The taxes are estimated based on the property and the review, and then we're using an estimate for the insurance. So that number will change based on who you select for your insurance. Yeah.
So we're talking about, for the actual mortgage itself, it would be around $3,600, and then this next tab, once you add estimated insurance, estimated taxes, your monthly bill could be a little bit over 4,000. Now, I think, can we stop sharing this now?
Yep.
Yeah, okay. Stop sharing. We go back here. Let's see if we have any questions. Hey, Jace. How's it going, Jace? Thanks for tuning in. We're talking about mortgages and buying houses. So let's see. What were you? I was about to say something about. I don't remember the monthly costs of once you do the estimated and add in the taxes and the insurance. That's a little. Oh, I remember what I was going to say. Taxes. So we're not accountants. We're not CPAs, but I do want to say that owning a home does have a lot of tax advantages. And that's definitely something that you should look into. When you pay interest on your loan, that interest is tax deductible. If you itemize, like I said, I'm not a CPA though. I'm saying this based on my own experience, but it's definitely, if you look at the biggest investors, the wealthiest people, real estate is one of the best investments that they make. And the reason for that is because there are so many tax advantages. So when we look at like renting comparing to owning, and you're looking at your monthly payment, so if you were paying 4,000 a month in rent versus 4,000 a month in mortgage, and then within that mortgage you have all these tax advantages of lowering your tax bill at the end of the year. It's just something to keep in mind when you are doing that comparison of buying versus renting. So just wanted to mention that.
Sounds good.
Um,
And we can do a rent versus buy type scenario sometime. That might be a good one.
yeah. I would love to. I think that's the main thing that we wanted to talk about today. I don't know how long we've been on here, but I just really wanted to show that home ownership might not be as far out of reach as you think. If you are interested in owning a home, if it's a dream of yours, it's something you're thinking about within the next several years, it would be really great to talk to either of us or both of us, because it is something that you can start planning. When I bought my first home, my credit was a wreck, and my mortgage lender that I was working with at the time helped me fix my credit for like over a year before I even applied for the mortgage. So there's a lot you can do ahead of time. You might not need to save as much money as you think. If you're thinking you need to save 20,000, 30,000, 100,000, we're here telling you you might only need to save a few thousand to actually be able to do this.
And that's a great point, Amber, what you brought up about the credit and things like that. So many folks think in their head, I can't do this, or I need to wait 2 years and things like that. To Amber's point, perhaps you have a couple little things on your credit that can be resolved, and I walk borrowers do that all the time, and we can take the time to do that while we have it now. Versus, you get really excited about this house and opportunity that comes up for you, and now you're in a scramble for it. So I always do encourage folks to just start. You'll get the information you need for the roadmap to get there if you can't get it today, or you may be pleasantly surprised that you have options right now. So good point, Amber.
Yeah. I mean, I definitely, maybe maybe we're wrapping up now unless anybody has any questions, but home ownership is definitely one of the best things that I ever did. The other thing to keep in mind when you're thinking about owning versus renting is that rent goes up every year. When you think about when you move into a place and you're paying one amount, how much are you going to be paying 10 years from then? How much are you going to be paying 20 years from then? It's going to probably double in the 20 years. Whereas a mortgage, you have that security that you know your monthly payment is going to be the same for the next 30 years or however long your loan is. If anything, it may only go down because you might have a chance to refinance. So for me, mom, that was huge to have stability, like home stability, that I knew, I wasn't going to have to worry about my rent going up every year, that I would have to find a new place to live. So, anyway, that was just something that I really wanted to mention.
The only thing in terms of the mortgage payment, just want to kind of remember that our taxes and insurance, unfortunately, we can't control those, and they may go up in that time frame. Most likely, 30 years of taxes will probably change.
Yes,
So
that's true.
That is the one thing
That's
that you
true.
might notice for your if you stay in the same loan for 30 years, the only items that will change would be the tax insurance.
That's very, very true. That's a good point. And it's a really, really good point, just because it is significant. It can be very, very significant, to the point where you see elderly homeowners that can't even afford. They might have bought their house for $30,000, now it's worth $1 million, and they can't afford the taxes on it. So it does happen. It does happen. But owning always gives you more options than renting. Period.
It feels nice.
Feels
You'll
like-
feel very happy when you close. It's a good feeling.
Yes. For everybody, you can tell we love the being there at the closing too.
Yeah.
But we just had one. That's why we had the balloons, we had the we had the champagne, we had
all the good
some-
stuff. They were psyched. That
Yeah.
was a good loan. They were happy. Campers took a little to get there, and we got there, so it's all good.
Yeah. And I'll tell you, from the moment that client called me and said he was interested in looking at homes, between that first phone call and actually closing and him moving into his house, was really just a few months. Like, I think it was like 4 months at the most.
Yeah, at the most, I would say it was pretty fast.
Maybe even 3 months.
Yeah.
So that was amazing. No more questions, so I guess that's it.
All right. Well,
All
thanks for
right.
having
Thank
me,
you
Amber.
so much for watching. I hope you learned something. If you have any questions, comment on any of our platforms. We are live here on Facebook, YouTube, and LinkedIn, because we're fancy like that.
I love it.
Yeah. So, Amber Jamanka, your favorite realtor. Move with Amber. Life in Camberville, Cambridge, Somerville community.
And I'm Erin with Movement Mortgage. You can't really see too much. And this is the fanciest I've been, I think. Whether we call it fancy in a while. So, or I don't get called that too often, I guess.
We're high tech. We're trying to be.
Yeah.
All right, guys. Thanks for
Bye-bye.
tuning in.
Enjoy your Friday.